Good morning and welcome to another day of crypto news. Today's market is off to a fascinating start with Cardano's ADA token stealing the show. It's jumped 12% in the past 24 hours, leading gains among the major cryptocurrencies.
That's right. And what's even more interesting is that this bump came without any immediate catalysts. There weren't any major announcements or events that would have typically driven such a significant price increase.
Exactly. And yet, here we are with ADA zooming above $1. Now, we know that Cardano has some fundamental developments in the works, which could be contributing to this upward trend. But before we dive into those, let's take a look at the broader market. Bitcoin, for instance, remains range-bound, which is likely influencing the overall market sentiment.
Yeah, and that's not surprising. Bitcoin's price movements often set the tone for the rest of the market. But in this case, ADA's gains are standing out, and some analysts are even predicting further gains of up to 30% for the token.
That's a pretty bold prediction. What's driving that optimism? Is it purely based on technical analysis, or are there some underlying fundamentals that we should be aware of?
From what I've seen, it's a combination of both. The price data analysis does suggest that ADA has some room to grow, but it's also worth noting that Cardano has been working on some significant upgrades to its protocol. These upgrades could potentially increase the token's utility and drive more adoption.
That's a great point. We've seen time and time again how upgrades and improvements to a protocol can have a direct impact on the token's price. And in Cardano's case, these developments could be a major catalyst for growth. We'll definitely be keeping an eye on that.
Absolutely. And speaking of growth, it's also worth noting that ADA's jump is having a bit of a ripple effect on the broader market. Some of the other major cryptocurrencies are seeing smaller gains, but gains nonetheless.
Yeah, it's always interesting to see how the market responds to these kinds of price movements, and we'll be exploring that in more detail throughout the episode. We'll also be taking a closer look at some of the other major stories driving the market today, including the latest developments in the world of DeFi and NFTs.
Sounds like a plan. And before we move on, I just want to quickly mention that we'll also be discussing the potential implications of ADA's price increase on the broader market. Will it be a short-term blip, or could it be a sign of something more significant to come? We'll be exploring all that and more, so stay tuned.
Building on what we discussed earlier about the influence of social media on cryptocurrency prices, we have another example of a celebrity endorsement, or rather a celebrity adjacent endorsement, causing a stir in the market.
You're referring to Roaring Kitty, the infamous Reddit trader who helped fuel the GameStop short squeeze, and his latest cryptic post that's pumping up Unity software shares.
Exactly. Roaring Kitty, aka Keith Gill, posted a GIF of Dave Chappelle impersonating Rick James from a 2004 episode of Chappelle's Show. Now, you might be wondering what this has to do with Unity software. But apparently, traders are interpreting this as a buy signal.
It just goes to show how closely traders are following Roaring Kitty's every move. His influence is undeniable, and it's fascinating to see how a simple GIF can send a stock soaring. But what's interesting is that Unity software isn't directly related to the cryptocurrency market.
That's true. But as we've discussed before, the lines between traditional finance and cryptocurrency are becoming increasingly blurred. We're seeing more and more crossovers between the two. And this is just another example of how social media can move markets.
And it's not just limited to cryptocurrency. We're seeing this phenomenon play out in traditional markets as well. The power of social media influencers and celebrities to shape market sentiment is undeniable.
Speaking of market sentiment, it's worth noting that Unity software has been on a tear lately, with its shares up significantly over the past year. So, while Roaring Kitty's endorsement may have added fuel to the fire, the company's fundamentals are also strong.
That's a great point. It's always important to do your own research and not just follow the crowd, but it's hard to deny the excitement around Unity software right now. The company's technology is being used in a wide range of applications, from gaming to architecture.
And with the gaming industry continuing to grow, it's no surprise that investors are taking notice. We'll be keeping a close eye on Unity software and Roaring Kitty's next moves to see if this momentum continues.
Absolutely, and it'll be interesting to see if other celebrities or influencers follow suit. The intersection of social media, celebrity culture, and finance is a fascinating space, and we're just starting to scratch the surface of its potential impact on the markets.
As we were discussing earlier, the regulatory environment for cryptocurrencies has been a major focus point this year, and we've got another update that ties right into that theme.
I think I know where you're going with this. You're referring to Kwon's recent extradition to the US, right?
Exactly. Kwon, the founder of Terraform Labs, has pleaded not guilty to charges of fraud following his extradition to the U.S., according to a report by Reuters.
To give our listeners some context, Kwon's Terraform Labs was behind the development of the Luna cryptocurrency and stablecoin Terra USD, which, as we all remember, suffered a catastrophic collapse in 2022, losing an estimated $40 billion, making him the largest social currency to lose in history.
That's right. And now federal prosecutors are alleging that Kwon made false statements to investors about the financial health of his company, as well as the stability of Terra USD. The complaint claims that Kwon knowingly misled investors, which ultimately contributed to the collapse of the entire Terra ecosystem.
What's interesting here is that Kwon has maintained that he's not guilty, despite the extensive evidence gathered by prosecutors. This case will undoubtedly be a major test for the regulatory environment in the U.S., especially when it comes to holding individuals accountable for their actions in the crypto space.
Building on what we discussed earlier about the need for clearer regulations, this case highlights the importance of having a robust framework in place to prevent similar incidents in the future. It's clear that the lack of oversight and transparency in the Terra ecosystem contributed to its downfall, and regulators are now taking steps to ensure that investors are better protected.
Speaking of investor protection, it's worth noting that the collapse of Terra had far-reaching consequences for the entire crypto market. It's a stark reminder that the actions of a single individual or company can have a ripple effect, impacting countless investors and projects.
As this case continues to unfold, we'll be keeping a close eye on any developments and exploring the implications for the broader crypto landscape. In the meantime, it's clear that regulators are taking a more proactive approach to policing the space, and that's likely to have significant consequences for projects and investors alike.
Earlier in the show, we touched on the power of celebrity endorsements in the crypto space. We saw how Elon Musk has been an influential figure for Dogecoin, but it looks like his impact isn't limited to just one coin.
That's right. Musk recently changed his Twitter name to Kikius Maximus, which is actually the name of an Ethereum-based meme coin, and in just 30 hours, the coin's market cap skyrocketed from $12.7 million to nearly $400 million.
I know, it's staggering, a 3,000% increase in such a short span of time, but what's even more impressive is the subsequent crash that followed once Musk changed his Twitter profile back to normal.
Yeah, it's like the saying goes, what comes up must come down. The token plummeted 67% in just 1 hour to $95 million. It's a reminder of how volatile the crypto market can be, especially when it comes to meme coins. But
building on what we discussed earlier about the power of influencers, this story highlights the double-edged sword that is celebrity endorsement. On one hand, it can bring a lot of attention and excitement to a particular coin. But on the other hand, it can also lead to unpredictable price swings.
Speaking of unpredictability, I think it's worth noting that Kikius Maximus is just one of many meme coins out there. And while some of them may have legitimate use cases or strong communities behind them, others are simply riding the wave of hype and speculation. My favorite example of a speculation coin is Luna. Luna was one of the last Bitcoins to blow up.
That's a great point. As we've seen time and time again, the crypto market is not immune to speculation and hype. And when you have influential figures like Elon Musk throwing their weight behind a particular coin, it can be difficult to separate the signal from the noise.
Absolutely. And I think that's why it's so important for investors to do their own research and due diligence before jumping into any particular coin or project. It's easy to get caught up in the excitement of a rapidly rising price, but it's crucial to understand the underlying fundamentals and risks involved.
Well, it'll be interesting to see how Kikius Maximus and other meme coins perform in the coming weeks and months. Will they be able to sustain their momentum, or will they fade into obscurity? Only time will tell. Elite Scarem, share in the triumph.
And in the meantime, we'll be keeping a close eye on the crypto market and bringing you the latest news and analysis. Stay tuned for more updates.
Building on what we discussed earlier about the growing adoption of cryptocurrencies, I think it's interesting to take a closer look at Bitcoin's computing power. We've been seeing some impressive growth in this area.
Absolutely, the numbers are staggering. Bitcoin's hash rate has increased by approximately 50% in 2024 alone, and it's currently on course to rise for the eighth consecutive time.
That's huge. To put it into perspective, the Bitcoin hash rate has appreciated 56% in the past year, averaging around 787 exahashes per second on a 7-day basis. This kind of growth indicates a significant increase in the network's security and resilience.
And if we look ahead, the projections are just as promising. If the hash rate continues to grow at a conservative pace of 20%, we could see it hit 1 zettahash by 2027. That's a major milestone, and it's remarkable to think that it could happen long before the next halving.
The halving, of course, being the event that reduces the block reward for miners by half. But what's driving this growth in hash rate? Is it simply a matter of more miners joining the network, or is there something else at play?
Well, since October, the Bitcoin network has seen 7 consecutive positive difficulty adjustments. This suggests that miners are indeed joining the network at a rapid pace, but it also indicates that existing miners are upgrading their equipment and increasing their efficiency.
That makes sense. As the price of Bitcoin rises, it becomes more profitable for miners to invest in better equipment and operate at scale. And as the network becomes more secure, it in turn attracts more users and investors, creating a kind of feedback loop.
Exactly. It's a virtuous cycle, and one that could propel Bitcoin to even greater heights in the coming years. Of course, there are always risks and uncertainties to consider, but for now, the fundamentals look incredibly strong.
Speaking of fundamentals, I think it's worth noting that this growth in hash rate is also a testament to the decentralization of the Bitcoin network. With more miners operating in different parts of the world, the network becomes less vulnerable to attacks or manipulation.
That's a great point. Decentralization is a key aspect of any cryptocurrency's security and resilience. And as we see more countries and institutions adopting cryptocurrencies, it's likely that we'll see even more growth in this area.
We've seen some fascinating trends unfold in the crypto markets today, and one that's caught my attention is the surge in Ether's leverage ratio. As we discussed earlier, Ether's record leverage ratio of 0.57 has more than doubled that of Bitcoin. This raises some interesting questions about market sentiment and trader behavior.
That's right. It seems that traders are increasingly turning to Ether as their go-to major currency for amplifying returns with leverage. This is a shift worth noting, especially given the institutional focus on Bitcoin. It suggests that Ether is becoming a more attractive option for those looking to take on higher risks and potentially reap greater rewards.
What's striking is the significant difference between Ether's leverage ratio and that of Bitcoin. This disparity implies that traders are more confident in Ether's short-term prospects, or perhaps they're simply more willing to take on risk in the Ether market. Either way, it's a trend that warrants close attention.
I agree. When we consider the broader market context, it's clear that traders are seeking opportunities to maximize their returns. With the current market conditions, it's not surprising that they're turning to Ether as a means to achieve this. However, it's essential to remember that high leverage trading comes with significant risks, and traders should be cautious not to overextend themselves.
Absolutely. As we've seen in the past, high leverage trading can lead to significant market volatility. If a large number of traders are taking on excessive leverage, it can create a perfect storm of risk that ultimately leads to a market correction.
That's a crucial point. While Ether's rising leverage ratio might be a bullish sign in the short term, it's essential to consider the potential risks and unintended consequences. As traders, it's vital to maintain a balanced approach and not get caught up in the excitement of potentially high returns.
So, what are the key takeaways from today's market action? Firstly, Ether's record leverage ratio highlights the growing appetite for risk among traders. Secondly, the significant disparity between Ether and Bitcoin's leverage ratios suggests a shift in market sentiment. And finally, it's essential to exercise caution and consider the potential risks associated with high leverage trading.
Looking ahead, it will be interesting to see how the market responds to these trends. Will Ether continue to attract high leverage traders, or will we see a correction in the market? As always, we'll be keeping a close eye on the markets and providing you with the latest insights and analysis.
That's all for today's episode. Thank you for tuning in, and we'll catch you tomorrow.